Look at question number 2, page number 36. Question number 2. The point Mochi Limited had 5,000 equity shares outstanding on 1st January 2014. What is that? Opening balance. The company and then issued 1,500 equity shares for cash on 1st October 2014. What is that? Add. Issue of shares you add. The company had then converted convertible debentures and then into 1,000 equity shares on 1st November 2014. Now tell me, for basic EPS, you will take it from which date? 1st November, because actual equity shares come into existence from 1st November in basic. For diluted EPS, you will take this equity shares as a potential equity share from which date? 1st January, because their potential of becoming equity share from the beginning of the debentures already exist from the beginning of the year. Did everyone understand? Calculate weighted average number of shares outstanding on 31/12. First we do it for basic EPS, then we do it for diluted. Okay? Give the heading. Weighted average number of equity shares in bracket for B particular number of shares balance weights. Raise your hand, we're still making the columns. So shall I start with it? Okay, come on. 1,114 opening balance. Silence everyone. In which column? In balance column 5,000. Did everyone understand this? Then Mansi did 11014 issue of shares 1,500 balance. 5,000 plus 1,500 issue of shares will be added, so 6,500. Dushyant, date for basic EPS we are finding weighted average number of it. For basic EPS we will take actual date of equity shares only, that is 1st November 2014. When do we take it from 1st January? For which EPS? For diluted EPS you take it as a potential equity share from the beginning of the year. Here conversion of debentures into shares. Yes, how many shares they are converted into? 1,000. And this also will add, so 6,500 plus 1,000, 7,500. Did everyone understand this? Then Weber weights. Yes, 1st January to 1st October. October is not included, so 9 by 12. 1st October to 1st November, 1 by 12. And November and December, 2 by 12. Now 5,000 into 9, 45,000 divided by 12, 3,750. 6,500 into 1 by 12, 42. And 7,500 into 15,000 divided by 12, 1,250, 554. Did everyone understand this? This is the range for basic EPS. Now we find it for diluted EPS. For diluted EPS, what do you call it as? Revised rates. Revised weighted average number of equity shares. Do your work without talking. In bracket you mention for diluted EPS, okay? This is for diluted EPS. Raise your hand, we're still making the columns. Column made it. Now, in diluted EPS, Richard, 1,114. Opening balance 5,000 further. Yes, again on 1,114 now for diluted EPS we'll take it as put this conversion of debentures into shares. We'll take it as a potential equity share from 1,114. Raise your hand who did not understand this. Yesterday we did this concept. 1,000, 5,000 plus 1,000, 6,000. Then we'll take 11014 issue of shares. 1,500, so 7,500. Wait, weights. 112, 11, no weights. Yes, 112, 114, so October is not included, 9 by 12. And 3 by 12. October, November, December, 3 by 12. Is everyone clear with it? Now it is 5,000 into nil. 6,000 into 9 by 12, 4,500. And 7,500 into 3 by 12, 2,500. 187, 7,500 into 3 by 12, 1,875, so 6,375. You can see here the number of shares are more than basic. Therefore, the EPS would go down and it's called diluted EPS. So, everyone is clear with this? Question 3. 3, mark it as your homework. So now we take up with full-fledged questions how to find diluted EPS, okay? In that now first we take up with debentures. Means if there are convertible debentures, then how to find diluted EPS. So first we understand that. Put your bets down. First we understand the effect of convertible debentures on diluted EPS. Now as I explained you yesterday, the concept of diluted EPS, that in future these debentures have potential of becoming equity shares. So because if in future they become equity shares, the earnings would be divided between more number of shareholders. So earnings will get diluted. Earnings will get decreased per share. So we call it as diluted EPS. Now, how does it get divided between more number of shares? Understand it. How would you find the revised weights? First of all, existing number of shares. They are the actual number of equity shares. In that you'll add number of shares where convertible debentures are converted into equity shares. Okay, rather adding number of equity shares, I add potential equity shares. Okay, in existing number of shares you'll add potential equity shares, means the convertible debentures which will get converted into equity shares. So adding that we will get revised weights. Any doubts so far? So revised weights will include the existing number of equity shares plus in future if debentures are going to get converted into equity shares, then that will also be included. Same way now tell me, will profits be affected in future if debentures get converted into equity shares? Number of shares will be affected. They'll increase because debentures will get converted into equity shares. So number of shares will increase. Now listen to my questions carefully. Will profit be affected if debentures get converted into equity shares?
Yes.
Profits attributable to equity shareholders, will it be affected? In what way? Would it increase or would it decrease? I am talking about the total profit. I am not asking about capital. I am asking about the profits. But where is more capital invested? Debentures get converted into equity shares. That's it. Where do you get money? Virtually the liability is not decreasing. So how does it affect the profit? That's what I am asking. Very good. Correct. Why late? Not late, you say. Yes, dear tender. How would profits be affected which are available to equity shareholders in future? If debentures get converted into equity shares, then we don't have to pay their interest. How do you get profits attributable to equity shareholders? How do you get profits attributable to equity shareholders? Profit after tax minus preference dividend. How do you get profit after tax? Let us start from the beginning. Sales minus cost of goods sold, gross profit. Gross profit minus operating expenses, PBIT. Profit before interest and tax minus interest, PBT. Now this interest we don't have to pay in future because debentures get converted into equity shares. So from PBIT we don't have to minus interest. PBIT itself becomes PBT. Will the profits available for equity shareholders also increase in future or not? And that's the reason I told you yesterday that sometimes after conversion of debentures into equity shares, EPS may increase also. If the magnitude of increase in profit is more than the magnitude of increase in shares, then maybe the EPS even increases. Is everyone clear with that? In that case, instead of dilutive securities, we would call it as anti-dilutive. Very rarely possible. That is possible only when we are paying fantastically high rate of interest to debenture holders, which overweighs the rate of dividend paid to equity shareholders. Then only it would happen. But otherwise, the magnitude of number of shares would be more than the profit. But however, profit in future is going to increase. Not overall profit is going to increase, but profits attributable to equity shareholders will increase because we don't have to pay interest. Is everyone clear with it? Now suppose there are 10 lakh debentures of 10%. So how much of interest we will save in future? 1 lakh means the profit should increase by 1 lakh? No. If company comes in 30% tax bracket, then profit will actually not increase by 1 lakh but by only 70,000. Because right now when we pay interest of 1 lakh, it's a tax deductible expense. So when you pay interest of 1 lakh, you save tax of 30,000. In future, when you don't pay that interest, then PBIT itself will become PBT. So tax burden will also increase. So interest you will save of 1 lakh, but tax you will pay more of 30,000. So the net benefit to the shareholders will be only of 70,000. Okay. For example, suppose the profits are 3 lakhs minus interest. This is the existing situation. Okay. So what is PBT? 2 lakhs. Now suppose company comes in tax bracket of 30%. What is 2 lakhs 30%? So what is the profit after tax? 1 lakh 40,000 means presently, suppose there is no preference dividend. Suppose there is no preference shares. Then what is the profits attributable to equity shareholders presently? 1 lakh 40,000. Now future, this debentures get converted into equity shares. So we don't have to pay this interest. Means PBIT 3 lakhs, no interest. PBT also. Now your tax burden increases. Now 3 lakhs 30%. How much more tax you have to pay? 90,000. You have to pay more of. Means this 1 lakhs 30% tax which you were saying, now you are not able to say. So now your tax burden increases. So PAT becomes how much? 2 lakh. So does PAT increase by 1 lakh? PAT is increasing by only 70,000. 140 to 210. Why 70,000? Because we save interest of 1 lakh, but then 1 lakh's 30% tax, we have to pay more 30,000. Instead of 60,000, now we have to pay the tax of 90,000. So net benefit to the shareholders is only 1 lakh minus 30,000, 70,000. Did anyone of you understand this effect of tax? So how would you find the revised earnings for the equity shareholders? Existing profits. When I say existing profits means existing profits attributable to equity shareholders. I am not writing that lengthy sentence. But existing profits means existing profits after tax minus preference dividend. Existing profits attributable to equity shareholders. Right now we are taking only debentures, means we assume there is no preference share. So PAT itself is attributable to equity shareholders. Now in future, the profit will increase with the amount of interest on debentures, but simultaneously profit will decrease with the amount of tax on interest, because tax burden will increase. Did everyone understand this? So this will be the revised profits attributable to equity shareholders. Okay, this will be the revised profits attributable to equity shareholders. Any confusion in this? Now, how will you find diluted EPS? Diluted EPS will be equal to, what was the normal formula we used to use for basic EPS? Profits attributable. Now you will take revised profits attributable to equity shareholders. And basic EPS we used to divide by weights. Now you divide it by revised weights. Revised weighted average number of equity shares. Any confusion in this? Okay. So presently we see effect of only single potential equity share, convertible debentures. Preference shares will study in the next lecture. Any confusions with this? Yes. And anyone who is not clear with this, raise your hand. Without talking, do it fast, everyone. Who all are writing it still, raise your hand. Raise your hand who is still writing. Look at question number 4. Be amended. Miracle Product Limited is finalizing the accounts for the accounting year ended on 31st March 2015 with following details. You are required to calculate EPS, means basic EPS, and diluted EPS both. We will count basic EPS also and diluted EPS also. Now, number of equity shares outstanding on 31/3/15, 30 lakhs. That is existing number of equity shares. Net profit earned during the year 14 to 15. So existing profits 96 lakhs. Number of 14% convertible debentures of 150 each. 50,000. So 50,000 are the number of debentures directly. It's not rupees 50,000, okay? Read it carefully. Number of, underline that, number of 14% convertible debentures of 150 each, 50,000. So 15,000 is the number of debentures. In bracket, each convertible into 10 equity shares. One debenture convertible into 10 equity shares. So 50,000 debentures, how many? 50,000 into 10 by 1, 5 lakhs. Is everyone clear with this? This is what? What is this 5 lakh equity shares? Potential equity shares. Okay, they will be convertible in future. They are potential equity shares. Further, insert in the question tax rate 35%. Tax rate 35%. Okay, so let us solve it. First, we find revised means. Existing number of equity shares. How many? 30 lakhs. Add potential equity shares. Now, one debenture will get converted into 10 equity shares. Okay, so 50,000 debentures. How many equity shares? 50,000 into 10 upon 1. 5 lakh equity shares. Any confusion in this? So 35 lakhs is revised weights. Now same manner we'll find revised profits. Anyone having any confusion up till here? Means in future there will be presently the profits are divided between 30 lakh shares. In future the same will get divided between 35 lakhs, and that is the reason we call it as diluted. Now existing profits after tax are 96 lakhs. Okay. Now profit will increase by interest on debentures because that we don't have to pay in future. Now listen carefully. As I said, what is that 50,000? Okay, be attentive. What is that 50,000 number of debentures? Raise your hand. What would be the interest on debentures? Correct. 50,000 is the number of debentures, and they are of 150 rupees each. So what would be the value of debentures? 50,000 into 150, 75 lakhs. And on that, 14% interest. Did everyone understand it? If rupees was directly given, then directly would have done 14%. But here directly don't do 50,000 into 14%. 50,000 is not the value, it is the number of debentures. So how do you find interest? 50,000 debentures into rupees 150, and on that the interest rate is 14%. Any confusion in this? So how much does that come to? 10 lakh 50,000 of interest will be saved. But simultaneously, if we save the interest, then we'll have to pay more tax. So less tax on interest. What burden will increase is 10 lakh 50,000. Remember, tax will count only on interest. Interest we will save 1050, but 10 lakh 50,000, 35% tax burden will increase. 3 lakh 67,500. So 96, 106 minus 3, 103, 102, 82,500. Is it? 1 crore 2 lakh 82,500 will be revised profits attributable to equity shareholders. Anyone having any doubt on this? Now we will find basic EPS and diluted EPS both. When we find basic EPS, we will take 96 lakhs divided by 30 lakhs. That is the existing EPS. When we find diluted EPS, we will take 1 crore 2 lakh 82,500 divided by 35 lakhs. Okay. So therefore basic EPS is equal to profits attributable to equity shareholders divided by gains. That is, what is existing profits? 96 lakhs divided by existing gains, 30 lakhs rupees 3.2. Whose mobile is making the noise again and again in between? Please keep it on silent mode or switch it off. Third time I've heard this now. Diluted EPS, revised profits attributable to equity shareholders divided by revised gains. So what are the revised profits we calculated? 1 crore 2 lakh 82,500 divided by revised gains 35 lakhs 2.94. See, does the EPS goes down or not?
Yeah.
Therefore we call it as diluted EPS. Is everyone clear with this? So one more question which you will explain me now. Look at question number 5. Be attentive. Following details are available of Cipla Limited for the year 2014 to 15. Net profit after tax of the current year, that is 1 crore existing profits. Number of equity shares outstanding 50 lakhs, that is existing. Number of shares, rate of income tax now is 30%. 1 lakh 12% debentures of 100 each. So what are the number of debentures? 1 lakh. Again, each convertible into 10 equity shares. So 1 debenture 10 shares, 1 lakh debentures 10 lakh shares. Calculate basic EPS and diluted. Okay. Himadri, existing number of equity shares is equal to 50 lakhs further plus potential equity shares. Yes, in bracket we will show that 1 debenture 10 equity shares. So 1 lakh debentures, how many? 1 lakh into 10 by 1, 10 lakh equity shares. 50 plus 10, 60 lakhs is revised gains. Right up, existing PAD, how much? 1 crore is given in the question. Can you see that or not? Net profit after tax of the current year 1 crore. So existing PAD is 1 crore. Yes, further. We'll add interest on debentures. How will you count that? Then what were you doing in the previous question? Just copying it. Read the information of debentures. Question number 5. Read the information loudly. Information of debentures, read it loudly. 1 lakh 12% debentures of rupees 100 each. So how will you count interest on debentures? 1 lakh is not the value, it is the number. That's what I explained in the previous question. 1 lakh debentures of 100 each. What will be its value? 1 crore. So interest 12 lakhs. Okay. What were you doing? I don't understand. How will you count interest on debentures? 1 lakh debentures into rupees 100 into 12%. 12 lakhs. What else? Less tax on interest. Is 12 lakhs interest into 30% tax. We'll have to pay more, that is 3,60,000. With this we have to minus. So 1 crore plus 12 lakh minus 3,60,000, 1 crore 8,40,000. That is revised profits attributable to equity shareholder. Next, therefore basic EPS is equal to profits attributable to equity shareholders divided by gains. Yes, further, his existing profits are 1 crore divided by existing gains is 50 lakhs, so 2 rupees. Okay, 1 crore divided by 50 lakhs, rupees 2. Diluted EPS is equal to, stop talking in between, revised profits attributable to equity shareholders divided by revised gains. Yes, further, 1 crore 8,40,000. Yes, 1 crore 8,40,000 is revised profits divided by revised gains is 60 lakhs. So 1.81. See, does the EPS again decrease or not? Therefore diluted EPS. So in future the equity shareholders will get less earnings per share because of conversion into equity shares. Did you understand the concept, everyone? Question number 9 I am discussing and you will solve on your own. Be attentive. Josh Limited had outstanding equity shares 25 lakhs on 1/4/14. What is that? Existing number of equity shares. Net profit for the year is 50 lakhs, that is existing profits attributable to equity shareholders. Company had 10% 50,000 convertible debentures outstanding of rupees 100 each to be converted into 15 equity shares. Now 1 debenture 15 equity shares, so 50,000, how many? 50,000 into 15, 7,50,000 equity shares. Tax rate is 35%. Calculate basic EPS and diluted. Understood that? Start solving it. Question number 9.